In an unexpected turn of events, China's stock market has experienced a remarkable surge, adding over $1.3 trillion in total value in just 1 month. This rally is primarily fueled by the advancements of DeepSeek, a pioneering player in the artificial intelligence sector, which has reignited investor confidence in Chinese equities. As hedge funds rapidly shift their focus back to China, the once favored Indian market is witnessing a significant outflow of capital, raising questions about the long-term implications of this financial pivot. The recent bullish sentiment surrounding Chinese stocks is largely attributed to DeepSeek's innovative contributions to the AI landscape. Ken Wong, an Asian equity portfolio specialist at East Spring Investments, emphasized the importance of this development, noting, "China actually has companies that are forming a vital part of the whole AI ecosystem." This renewed interest comes at a time when India is grappling with a record cash exodus driven by concerns over slowing corporate earnings and elevated stock valuations. The contrast is stark, as the MSCI China Index has been on track to outperform its Indian counterpart for the third consecutive month, its longest winning streak in 2 years. DeepSeek's advancements not only reflect a technological renaissance in China but also indicate a broader reevaluation of the country's investability. Following a period of regulatory crackdowns that had previously deterred investors, recent moves by Beijing to engage with tech entrepreneurs, including Alibaba's Jack Ma, signal a more favorable environment for innovation. Vivek Dhawan, a fund manager at Candrium, remarked that the combination of improved technology prospects and a more inviting regulatory climate makes China a more attractive investment destination compared to India on a risk-reward basis. He stated, "If you put all the pieces together, China becomes more attractive than India in the current setup." Additionally, the valuation gap between Chinese and Indian equities is significant, with the MSCI China Index trading at just 11 times forward earnings estimates compared to around 21 times for the MSCI India Index. This disparity further enhances China's appeal to investors seeking value in a market characterized by rising tech potential. While the stock market thrives, the automotive sector is grappling with its challenges. General Motors recently announced the closure of its factory in Shenyang, a move that reflects the strategic restructuring of its operations in China, where domestic competitors are increasingly gaining ground. GM's restructuring charges in China reached $4 billion in the fourth quarter, underscoring the competitive pressure posed by local manufacturers. During an automotive conference, CEO Mary Barra indicated a shift in focus towards premium brands like Cadillac and Buick, which remain desirable among certain Chinese consumers. In a separate yet equally relevant note, U.S. Customs and Border Protection recently seized more than 161,000 counterfeit U.S. forever stamps imported from China, highlighting ongoing challenges related to intellectual property and counterfeit goods. The stamps, which would have been valued at over $118,000 if authentic, were flagged due to suspicious shipping practices. LaFonda D., a Sutton Burke director of Field Operations Chicago, praised the efforts of the CBP officers in preventing counterfeiters from profiting off these fraudulent goods. As China positions itself as a renewed hub for technological investment, the implications extend beyond stock prices. The shift in investor sentiment highlighted by DeepSeek's influence could redefine the landscape of global investment strategies. Looking ahead, the interplay between technological innovation and regulatory support will be crucial in determining whether China's stock rally is a sustainable trend or a fleeting moment in the fast-evolving global economy. The recent announcement of the closure of the U.S. Agency for International Development (USAID) has sent ripples through the international political landscape, particularly in the Global South. With the agency's shutdown, which was part of a broader cost-cutting strategy initiated under President Donald Trump's administration and heavily influenced by billionaire Elon Musk, experts are contemplating the potential implications for U.S. foreign policy and the opportunities it may present for China to enhance its soft power in developing nations. As of mid-February 2025, the USAID website is offline, and hundreds of senior staff have been placed on leave, jeopardizing ongoing humanitarian efforts that have historically defined U.S. engagement in global aid. While a federal judge has temporarily halted the agency's closure, its long-term viability remains in question, leading some Chinese officials to perceive an opportunity for Beijing to expand its influence. One unnamed economic official noted the retreat of USAID will benefit Beijing in promoting its image and building up its footprint in the developing world, highlighting a sentiment that is gaining traction among China's leadership. The vacuum left by USAID's closure aligns with China's ongoing strategy of increasing its presence through soft power initiatives, particularly in regions where the US has significantly scaled back its commitments. The shift comes at a time when China is already deeply invested in many parts of Asia and Africa, leveraging its economic muscle to engage with developing nations. As Graham Allison, a professor at Harvard University and a noted expert on China, articulated, if the U.S. withdraws from trade agreements, countries that want trade agreements in order to grow economically would fill this vacuum. This sentiment underscores a broader concern that the U.S. is retreating from its role as an international leader, allowing China to step in and fill those gaps. In parallel to these developments, the Munich Security Conference has drawn attention to the shifting dynamics in global leadership roles. U.S. Vice President J.D. Vance's contentious remarks at the conference contrasted sharply with Chinese Foreign Minister Wang Yi's more conciliatory approach, further illustrating the growing divide in U.S.-European relations. Vance criticized Europe sharply, which led German officials to express their discontent, while Wang emphasized China's willingness to collaborate with European nations. Observers, including experts from both sides, have noted that this presents China an opportunity to position itself as a global mediator, particularly in conflict regions like Ukraine. China's ambitions to replace the U.S. as a global leader hinge on its ability to present itself as a stabilizing force in international affairs. This includes not only economic partnerships but also political diplomacy in crisis regions. The potential for China to emerge as a champion of peace in global conflicts could significantly reshape the narrative around its influence, particularly as it seeks to improve its standing in Europe and beyond. However, the path to establishing itself as a new world leader is fraught with challenges. China's relationship with Russia, alongside its military assertiveness in the Asia-Pacific region, complicates its efforts to be viewed as a benign global actor. European nations wary of China's growing influence are also grappling with internal divisions about how to engage with Beijing effectively. As the geopolitical landscape continues to evolve, the implications of USAID's closure and China's potential ascendance in the global south will likely dominate discussions among policymakers and analysts alike. The interplay between U.S. withdrawal and Chinese engagement will set the stage for future international relations, particularly as nations assess their strategic priorities amid shifting alliances. In conclusion, the unfolding scenario raises critical questions about the future of U.S. foreign policy and China's strategic ambitions. As the dynamics of global leadership shift, the effectiveness of China's soft power initiatives will be tested. And the world will watch closely to see how these developments shape international cooperation and conflict resolution in the years to come. In recent weeks, the financial landscape has witnessed a seismic shift, largely driven by the remarkable ascent of DeepSeek, a Chinese artificial intelligence firm that has captured global attention. This surge in AI innovation has not only revitalized interest in Chinese equities but has also prompted a significant reallocation of investment from India back to China, leading to a staggering $1.3 trillion rally in Chinese stock markets. Analysts suggest that this transformative moment may also impact the geopolitical currency dynamics, particularly regarding the US dollar's long-standing dominance. Hedge funds have been flocking to Chinese stocks at an unprecedented rate, invigorated by optimism surrounding DeepSeek's influence on technology and the potential for further economic stimulus from Beijing. In stark contrast, India is grappling with a substantial outflow of capital fueled by concerns over slowing economic growth and inflated stock valuations. In just 1 month, China's equity markets have gained over $1.3 trillion in value, while India's market has contracted by more than $720 billion. The MSCI China Index is on track to outperform its Indian counterpart for 3 consecutive months, marking a notable turnaround from the trend of the past several years. Ken Wong, an Asian equity portfolio specialist at East Spring Investments, emphasized the significance of DeepSeek's advancements, stating, "China actually has companies that are forming a vital part of the whole AI ecosystem." His firm has strategically shifted investments towards Chinese internet holdings while scaling back on smaller Indian stocks. This pivot reflects a broader reassessment of investment opportunities in light of China's growing tech appeal, particularly after a period characterized by regulatory crackdowns that had previously unsettled investors. The renewed interest in Chinese equities coincides with a fundamental reevaluation of the country's investment attractiveness, especially within the technology sector. Following the invitation of prominent entrepreneurs including Alibaba co-founder Jack Ma to meet with top government officials, there is a growing sentiment that Beijing might support AI development, further enhancing investor confidence. If you put all the pieces together, China becomes more attractive than India in the current setup on a risk-reward basis, noted Vivek Dhawan, a fund manager at Candrium. Moreover, the valuation differential between the two markets adds to China's allure, as the MSCI China Index trades at a mere 11 times forward earnings estimates compared to approximately 21 times for the MSCI India Index, making Chinese equities increasingly appealing to investors seeking value. As the narrative surrounding DeepSeek unfolds, the implications extend beyond stock market dynamics. Financial analysts are beginning to contemplate the potential impact on the global currency landscape, particularly regarding the Chinese yuan's internationalization. According to a report from 91, a London-based asset management firm, the rise of DeepSeek could challenge the technological pillars that underpin the US dollar's dominance. Alex Holroyd-Jones, the firm's multi-asset portfolio manager, posited that if DeepSeek's efficiency gains are realized, they could disrupt existing investment paradigms and erode the United States' technological leadership. The discussions surrounding DeepSeek's influence on the US dollar reflect a broader concern regarding the shifting balance of global power. With technological advancements potentially flattening barriers to entry in various markets, regions traditionally reliant on U.S. technological supremacy may find new opportunities for growth. Holroyd-Jones noted both will implicitly benefit energy-poor regions and relative tech laggards, thereby undermining one pillar of U.S. exceptionalism. As these developments continue to unfold, the world watches closely to see how DeepSeek's innovations will reshape not only the Chinese economy but also its role on the global stage. With the stock market rally serving as a potential harbinger of renewed economic vigor in China, the interplay between technology, finance, and geopolitics will likely define the coming years. Investors and policymakers alike must remain vigilant, as the implications of these shifts could reverberate across economies and currencies worldwide. In an increasingly complex and interconnected world, recent geopolitical developments highlight the evolving dynamics between major global powers. The ambitions of former President Donald Trump, his anticipated visit to China, and the simultaneous military maneuvers in the Taiwan Strait illustrate the delicate balance of diplomacy and defense that shapes international relations today. Trump's potential visit to China within his first 100 days in office has generated both intrigue and skepticism. As Bonnie S. Glaser, managing director of the Indo-Pacific program at the German Marshall Fund, notes, the meeting represents an opportunity for the U.S. to engage directly with its foremost strategic competitor. However, she cautions against expecting a sweeping agreement akin to the historic Nixon in China moment, given that the geopolitical landscape has shifted dramatically since the 1970s. Instead, Glaser suggests a focused negotiation on specific objectives that align with American interests as both countries grapple with their respective economic challenges. China's economic landscape is fraught with difficulties, including a struggling real estate market and a declining growth rate. This backdrop may provide Trump with leverage during talks, although it remains uncertain how much sway he will actually hold. President Xi Jinping is likely to approach these discussions with an eye on avoiding further tariffs and protecting China's access to advanced technology from the U.S. Glazer outlines a series of possible concessions from both sides, including commitments on trade and defense, but warns that sensitive issues such as arms sales to Taiwan should remain off the table. While these diplomatic overtures unfold, the situation in the Taiwan Strait continues to escalate. On February 16, the Canadian warship HMCS Ottawa traversed this contentious maritime corridor, coinciding with heightened military activity from China. The Taiwanese Ministry of Defense reported the detection of 24 Chinese military aircraft, signaling a tense atmosphere in a region where both the U.S. and its allies assert their commitment to freedom of navigation. This incident reflects the growing complexity of military interactions in the strait, where the presence of foreign naval forces is met with stern warnings from China. As tensions simmer, the broader implications of military posturing in the region cannot be overlooked. The actions of the HMCS Ottawa and the responses from the Chinese military highlight the precarious nature of maritime security amid competing national interests. Observers warn that the balance of military activities could easily tip into miscalculations, leading to potential confrontations. Adding another layer to this intricate geopolitical tapestry, India and the U.S. are poised to deepen their defense cooperation. Recent discussions between Prime Minister Narendra Modi and President Trump have centered around increasing arms sales, including advanced F-35 stealth fighter jets, as part of a broader strategy to counterbalance China's influence in the Indo-Pacific region. Military experts in India express cautious optimism, recognizing the potential for enhanced deterrence while also acknowledging the time required to transition away from long-standing reliance on Russian military supplies. The strategic partnership between India and the U.S. is increasingly seen as a counterweight to China's ambitions, particularly in light of the growing presence of the Chinese military in the Indian Ocean and its collaborations with neighboring countries. As India seeks to modernize its armed forces and diversify its defense procurement, the implications of these partnerships will resonate not only regionally but also on the global stage. In a surprising turn, Trump has also floated the idea of a trilateral meeting with Xi and Russian President Vladimir Putin to discuss significant cuts to military budgets, a move that could fundamentally alter U.S. military posture. While the feasibility of such a proposal is questionable, it underscores Trump's willingness to challenge conventional foreign policy norms in pursuit of closer ties with both Russia and China. The confluence of these events, the anticipated Trump-Xi talks, rising tensions in the Taiwan Strait, and the evolving U.S.-India defense relationship, offers a revealing glimpse into the future of global diplomacy. As national interests collide and alliances shift, the coming months will be critical in determining how these intricate relationships will shape the world's geopolitical landscape. Observers will be watching closely to see whether these negotiations yield substantive outcomes or merely serve as a prelude to further tensions in an already volatile arena. In a significant shift in diplomatic language, the U.S. State Department has quietly removed a phrase from its website that explicitly stated Washington does not support Taiwan's independence. This change, made public on February 16, 2025, reflects a nuanced evolution in U.S. policy regarding Taiwan, an island that has long been a focal point of tensions between the United States and China. The updated fact sheet on U.S.-Taiwan relations continues to affirm adherence to the One China policy but now refrains from explicitly opposing Taiwan independence. The revised language emphasizes Washington's commitment to peace and stability across the Taiwan Strait, stating, "We oppose any unilateral changes to the status quo from either side." The document further articulates that differences between Taiwan and China should be resolved peacefully and without coercion, respecting the wishes of the people on both sides. This alteration comes at a time when the geopolitical landscape surrounding Taiwan is increasingly complex. Analysts suggest that the U.S.'s omission of the phrase could signal a more flexible approach to Taiwan's status amid rising tensions with China. The previous wording had been a cornerstone of U.S. policy for decades, and its removal indicates a potential recalibration in how Washington engages with Taipei and Beijing alike.
Taiwan's central news agency noted that the previous version of the fact sheet explicitly stated the U.S. position against Taiwan's independence along with its commitment to preventing unilateral changes to the status quo. The current fact sheet.
While maintaining a level of support for Taiwan's international participation and technological cooperation with the U.S., omits any reference to statehood, reflecting a cautious step away from previous commitments. The implications of this change may extend beyond mere semantics. The U.S. has been increasing its military and diplomatic engagements with Taiwan, particularly in response to China's assertive military posture in the region. The updated fact sheet could be interpreted as an attempt to strike a balance, reassuring Taiwan of U.S. support while also managing relations with China. Analysts have also pointed to the broader context of U.S.-China relations, which have grown increasingly fraught in recent years. As the U.S. navigates complex issues such as trade, technology, and military presence in the Asia-Pacific, its approach to Taiwan remains a critical aspect of its strategy in the region. The ongoing global challenges, including climate change and economic stability, further complicate the dynamics as both nations seek to assert their influence. As the world watches this development, the question arises, how will this shift in U.S. language impact Taiwan's aspirations and China's stance? With the backdrop of increasing military exercises by China near Taiwan and heightened rhetoric about its sovereignty, the U.S. decision to refine its language could either serve as a catalyst for more assertive Taiwanese policies or provoke stronger Chinese opposition. In conclusion, the U.S. State Department's removal of the phrase opposing Taiwan independence marks a notable shift in diplomatic language, signaling potential changes in the U.S.'s approach to Taiwan amid evolving geopolitical dynamics. As both regions grapple with the implications of this adjustment, the future of U.S.-Taiwan relations will likely continue to unfold against a backdrop of both cooperation and contention. The coming months will be crucial in defining the trajectory of these relationships as the global community closely monitors developments in the Taiwan Strait.